Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Happy Monday, 17th of October, 2022. Got green futures out there. You got over in the UK, they've done an about face on the policy that would have affected tax refunds and what have you. So that is unwound. Bond prices over there are a little more tame. US dollar down, that helps. Maybe one of the biggest things this morning is Mike Wilson out of Morgan Stanley, who's been dead right on the bear market, is seeing a potential for near-term uplift, turning a bit more positive on the market in terms of where stocks can go near term. While the U.S. witnessed another red-hot CPI report last week, Wilson argues that this type of data is some of the most backward-looking economic series and tell us little about the future. In our view, inflation has already peaked and could fall rapidly next year as comparisons become very difficult in discounting returns. This would argue for lower back-end rates, which could be supported for stocks until the earnings are cut, as we expect, and or a full-blown recession arrives. He puts out the S&P 4000 as a potential target for the bear market rally that he thinks is potentially happening near term. That we're currently in early stages of right now. So that's interesting, and I think that that would kind of go along with what we've been saying in terms of you've got this interest rate led bear market kind of passing the baton off to the earnings bear market, kind of like what he's saying, that the worst of it in terms of the impact from interest rates may be realized. You got a terminal Fed funds rate of 5. I think most people think that we're probably not going to get there. Something probably breaks before that on the world financial scene. So that's it's interesting. The other thing to think about, what's going to be the career-saving trade going into year end? Meaning, you've got so many hedge funds that have underperformed. They're going to gravitate to something, and it probably more of a macro tilt. I don't know if it's going to be gold, energy, small caps. I have no idea. But the point is, there'll be something that they're going to try to juice big time. So that's something I'll be on the lookout for. To the extent that I can kind of maybe start to put that together, I will definitely talk about it. But something to think about at the back of your mind. Also, earnings season underway. Fundamentally, you got the banks doing okay. Bank of America looking up 4 this morning. Schwab doing okay. Decent results out of B of A. That's encouraging. Net interest margins doing pretty well, which not unexpected. And that's it. So yeah, enjoy it. If Mike Wilson's right, enjoy the ride to 4,000 or so in the next few weeks, and then we'll take it from there. Talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.